All right, let's bring in Oliver Sloup from Blue Line Futures in Chicago. Oliver, that was a mouthful of numbers. Anything stick out here there that you'd like to address?
Well, a little bit of a mixed bag today, which is nice to see, considering yesterday was mostly a sell everything first, ask questions later type of environment. So nice to see things cooling off a little bit. The thing that sticks out to us is this December corn contract testing and holding that trend line support that goes all the way back from May 9th. We tested and held it on March 29th as well. Even further back, February 25th, that comes in at 725. This is what we would define as a must-hold area for the December corn contract. And break and close below could start to trigger some additional long liquidation and press prices back under that psychologically and technically significant $7 handle. Obviously, a lot of variables still in play with regards to weather and planting here in the Midwest. But if we get the rest of this crop in the ground in a timely manner and get some good forecasts here in the near future, we wouldn't be surprised to see this market break below that trend line and get back towards that $7 level.
Seems like a lot of folks are bailing out on wheat right now. What do you think about that?
I have temporarily put it in the untradeable category, especially in the overnight session.
That's the best answer we've had. Best answer we've had all day. Thank you.
We've just been flying around on an extremely light volume. We're almost $1 off of this week's highs, so it's just kind of a spectator's market at the moment. But once things settle back down, I'd be more than happy to take a stab in the market. We generally like to lean on the sell side up at these levels, but as I've mentioned, the volatility and the liquidity issues, just not my type of trading environment.
So we're going to need to see the world kind of settle down before our products do, because we've got this big bad inflation thing hanging over our heads. That's one problem. Money sloshing around is another. And we had Bloomberg come out with a report. I don't know if you saw this, that they thought the two most crowded trades right now were cash and commodities. Two C's. What do you think?
Yeah, I kind of agree with the Bloomberg on that one. I think commodities super cycle may be in the back half of the innings, maybe the 7th, 8th, maybe pushing the 9th inning. And this has been one of those markets or sectors where it's been conditioned every trader to buy every single dip, and that won't last forever. So especially working with producers in the agricultural space, I think it's important to capitalize on these higher prices, not necessarily sell everything. There's a lot of great ways to protect yourself and put a floor in the market at the very least while keeping that upside open.
100%.